You're also talking about NVIDIA and, your words, the most important stock right now. But also, if we do have that consolidation or a period of sideways trading, do you think that sends broader jitters to the point where we initiate or see the beginning formation of a correction?
Yeah, I think we're actually in the midst of a correction right now. I think we peaked in late December. What I look at is the overall breadth of the market, and the breadth has been very negative. We saw at one point, December 18th was the low, where we had the 10-day, the percentage of stocks above the 10-day moving average, meaning momentum was really negative, was under 5%. So we were oversold. We got a little bit of a rally. Now let's look at the big picture, the 200-day moving average. Only 51% of the S&P 500 is above the 200-day moving average. The last time we were that low was when? October 2023. When was the last time we had a 10% correction? October 2023. The similarities are there. 6,100, 60.99 to be exact, was the high in this S&P 500. If we get a 10% pullback, we get just below the 200-day moving average in the S&P 500. We haven't gone there since October of 2023. Let's revisit, hang out, readjust. There are a lot of fundamental factors that people are concerned about. Josh talked about the 10-year. I don't know where it is right now, but 4.706 is something I'm watching very closely. That was the April high. What did we do prior to that? We got the 4.998%, almost 5%. We will probably take a run at 5%, and guess what's going to happen? Equities are going to get jittery, and we're going to sell off a little bit. This is a normal correction in a secular bull market. Nothing fundamentally has changed, but we're worried about taxes and the implications it has on inflation. We have a new administration coming in. We're not certain how that's going to play out. And then unemployment, the dual mandate, inflation, unemployment. Unemployment has potential to tick up if DOGE does some of the things they're saying they're going to do with cutting government spending. That means jobs. So there are concerns that are real, but earnings growth will eventually drive this market. But right now we're in an uncertain time. 10% corrections happen on average every 18 months. We haven't had one in 14, 15, if my math is right. So I think we're living through a little corrective phase in a secular bull market. But when you live through it, it's not fun, and you get nervous. And I'm not looking to make headlines by saying we're in the midst of a correction. But you know, people see that and they get a little spooked. I think it's a buying opportunity.
Jay, what about the degree of the correction if we do see? So we have the 10-year yield right now. It's actually right at 4.7 flat. But if we do cross above that 5% level, even touch that 5% level, are we talking about an even deeper correction maybe than what you're forecasting?
Yes. If we spike above 5%, then I will reevaluate my thesis, and we'll look at the charts, we'll look at the fundamentals. I'll come back and I'll eat crow and say I was wrong, that it was only, it may be, the end of the bull market. I don't see that. I just don't. I think we may make a run at 5%, but look at the run the 10-year has had. Over the long term, it's broken out, and it's not what I want to see. But I think the market has been able to adjust. We're still only 3.5%, 4% off of the highs in the S&P 500 with the 10-year where it is. The 10-year has been able to adapt, and equities have been able to adapt to higher for longer. But when we started cutting rates back in September, we're down 100 bips since that rate cut, and all rates have done is gone up. It's a little unsettling, and something's got to give. And right now, I think the give is going to be in the equity market, and we're living through that. And when you see NVIDIA do what it did, being the largest stock market cap-wise until yesterday, of course, Apple now #1, congrats. But you have, it's in the Dow. It's the most important stock in the world, and it looks like it's in a corrective phase, and we've seen it before. This is, the story is still there. There was a great story out of CES. It didn't continue. Right. They've had great earnings where they've reversed and trended sideways for a little while. Giving back 20%, it sounds awful, but the big picture, and that's why we looked at the 5-year chart, is still positive. So nothing is, if you're a long-term investor, you own NVIDIA, just shut this, don't tune in for these guys, but shut me off, mute me right now. But if you're a trader, and that's what my background is, I would have been stopped out once it broke below 150 yesterday, and now I would have reversed, gone short, and I would play it to 125 safely, 120 realistically, and then reevaluate the stock trade there. So.